bit about me if you don't know. I'm a chartered accountant, mainly work with property investors, have done since 2003, and the last 5 or 6 years we kind of focused mainly on working with property investors. So about 85-90% of our clients are either out and out property investors, or they do something else and have property. I'm a property investor myself, and I'll talk about one of the deals. I've written a book and a few books, and I've got 5 different businesses. So that's just a bit about me. However, so this is called the New England Club. It's a property that I purchased back in 2018 for £500,000. And then, so this is the kind of a drawing of the entire property. There's a light on here, but here we've got the club, and over here they had like a function room and a car park. So we bought it for £500,000. Then we had to go through planning because we didn't have any permitted development or prior approval rights for this particular class use. That cost us £65,000. To refurbish it, £400,000, and then we borrowed some of the funds to refurbish. So this whole thing cost me just over £1 million to convert into 12 flats, 6 one-bedroom flats, 6 two-bedroom flats. And it also had a 2-bedroom bungalow on it, on the side. The GDV, if we were to sell it, which we haven't done by the way, if we were to sell it, came at £1.3 million. So we're making a decent profit of £302,000, which ain't that bad. Is anybody doing commercial conversion in the room by any chance? Okay, so Oliver, about
30% of cost, roughly, isn't it?
Is that about right?
I mean,
good, bad.
Developers work on 20, so that's
good. Some people do 15, but yeah. So
Mark Holmes says 30, doesn't he? So.
Yeah, well, aim for 13, then you might get to 20.
Yeah, there is that.
Because you never get to what you want to get to, by the way, with any commercial conversion. So if you're looking to do commercial conversions, there's 2 things which are guaranteed. One is you're not going to finish on time. It's always going to take longer. And the second one is it's definitely going to cost you more. No matter if you have a fixed price, I'm telling you, they always come in there. I'm not sure if your experience is similar, Oliver.
Generally on refurbs and things, yes.
Yeah, absolutely. Yeah. Always costs more, always takes longer. Anyhow, so we're making £302,000, which is not a bad profit, according to Oliver, based on what other people are doing. So if you're buying a commercial property, do you pay VAT on it?
It depends.
You sound like a good accountant, by the way. Does anybody want to have a guess? Okay, who thinks you pay VAT on a commercial property? Raise your hands. Okay, 1, 2, 3, and who? Well, 4 or 5. And who thinks we don't pay VAT on a commercial property? Okay, and who's still thinking about the question? Okay. So it depends. What does it depend on, Oliver? Without picking on you too much, by the way, because I'm going to try and get other people to participate. But because you answered the question, what does it depend on?
I'm not entirely sure. So the category that the property falls into, but that's a kind of a vague answer. But and probably the scale of it. Okay.
Does anybody else want to have a go? Why we may have to pay VAT on a commercial property? Peter, isn't it?
Yeah. Well, isn't it the question that was asked earlier, which is if you're over 85,000 income, then you're going to have to pay on it anyway?
Good answer, but it's not the right answer.
If the vendor is elected for VAT, it registered for VAT.
Okay. See, Oliver, this young lady sounds like an accountant as well. Are you an accountant by any chance?
No, I'm a estate agent.
Okay, yeah, so basically what happens is somebody buys a commercial property, for example, let's say 15 years ago, and then they want to refurbish it, and it costs them, let's say, £100,000 to refurbish plus VAT, and the person who owns the property says, I'd like to claim the VAT back, so they go to HMRC and say, can I have the £20,000 VAT back? And HMRC say, of course you can, but there's 2 things you have to do. One, obviously, you enter an option to tax, which means for the next 20 years, you're going to charge VAT on the rent. So whoever your tenant is, they have to pay you VAT. The second thing is, if you sell the property, you must charge VAT on the disposal. Yep. So they enter into an option, and then they charge VAT. So some commercial property, if you're buying commercial property, may have VAT on it, some may not. And it's got nothing to do with the amount of rent you collect, generally speaking, Peter. But obviously, if you elect to tax or opt to tax, then you have to charge VAT. Now, if you're buying a commercial property, let's say for £500,000, and you're paying VAT on it, do you pay the stamp duty land tax on the 500 grand, or the 600 grand? Because the extra 100 grand VAT is tax anyway, isn't it? Does anybody want to hazard a guess?
500.
500 grand. Some 600. Why is it 600, Richard?
Well, because that's the transaction price
Yeah, that's right.
that needs to be stamped.
Yeah,
That's a guess, but
yeah. We don't stamp anymore. We used to stamp. They changed that in 2003 because that was.
I'm older than I look.
Yeah.
Surely you're paying tax on tax.
That's right. That's right. So if you're buying a property with VAT on it, you're going to pay stamp duty, land tax on the VAT element too. So that's the scenario we had here. Now there's two obvious ways not to pay VAT. The first one is to do a transfer of going concern. So in this particular case, we spoke to the vendor, and if this was an ex-working men's club, and they had snooker tables in there, pool tables, all kinds of slot machines and everything else, and they wanted to store all that equipment there while they pay out all of the membership and then sell those items. So we agreed for them to stay in the property for 3 months, and they can obviously pay us rent. And by doing so, we bought the property as a going concern. So if you have a property where you have a tenant and you buy that property, you can do something called a transfer of going concern if you meet the rules. That means you don't pay the VAT. So the first benefit for you is you don't have to find the VAT. Because otherwise you need to go to a bank or a third-party lender like Richard or a broker, and then they'll find you a lender, and then you have to pay an accountant to try and get the VAT back for you. That's not always straightforward. And the second benefit for you is you don't pay the SDLT on the VAT. That's number one. Your second option is, what you can do is complete a VAT 1614D and ask the vendor to accept that. That means you're going to convert a commercial property into a residential property, the kind of stuff Oliver and I do. If they accept it, then you don't pay VAT. If you do the first one, the transfer of going concern, you have to elect or opt to tax, and going forward, you charge VAT to your tenant both on the rent and the disposal. Everybody okay with that? Okay, so because we kept the tenant in there for 3 months, we did a transfer of going concern, so we saved the SDLT on the £100,000 at 5%, so that's £5,000. The second thing we did was a capital allowances claim. So if you're buying a commercial property, you may be able to claim capital allowances. Do we have any lawyers in the house by any chance? No? Okay. And you may sometimes assume that your solicitor will ask the question about capital allowances when they're doing the commercial property standard inquiries. But lawyers don't advise you on tax. So it's your job to make sure when you agree to buy a property, that when your solicitor carries out the standard inquiries, there's a particular question which asks about capital allowances. Tell them not to put 0, nil, NA, but at that time to have a conversation with the vendor's solicitor to make sure that you can make a claim for capital allowances. If you don't, you're going to miss out on a big chunk. So in this particular case, here's an actual list of all the capital allowances and the items we claimed, and that came up to just over £126,000. So we bought the property for 500 grand, and £126,000 of that 500 grand qualified for capital allowances based on all this equipment here. And I'll come back to this in a second in terms of how this helps us in terms of tax. We then found some asbestos in the property, and to have that cleared, we obviously had to pay a chunk of money, and if you have that, or Japanese knotweed or other forms of contamination, you can claim land remediation relief, and you get 50% more tax relief. So if you spend 10 grand on clearing it, you get an extra 5 grand in terms of tax relief. So that was 14,250. What we then did was, because we were going through the planning process, and that took, I think, probably about 15 months. During that stage, you have to pay business rates. So what we did was, we were approached by a charity who wanted use of a building, and they were mainly working with homeless people, but as you'll know from experience probably, most smaller charities have tight cash flow. So they said, can we use your building until you start developing it for free, and we'll take over the business rates. So we did, and again, you may know from experience that if you run a charity, you get an 80% rebate on business rates, and then if you can apply for the extra 20% as well by making a special case, which they did. So we weren't paying the business rates, they weren't paying the business rates, but they were able to run their charity. So that saved us just over £10,000. Later on down the road, we were able to incorporate our property portfolio, and that saved us 150 grand in tax. And I'll quickly cover, in fact, we have a question on incorporation here. That was your question, Peter, wasn't it? So if you remind me about the 150 grand, Peter, I'll share at that time how we got to that. But that saved us just under 30 grand. Capital allowances, so the actual physical tax saving on the £126,000 worth of capital allowances comes just under £24,000. So that's how much tax we're going to save in future years by writing down those capital allowances. The SDLT and the interest and the fees, 7.5 grand. The 7.5 grand rent paid to us by the tenant because they wanted to store their equipment, and we paid 5% VAT on the refurb. So if you're buying a commercial property and converting it to residential, you pay 5% VAT and not 20%. Yeah? So whether you increase the number of units or reduce the number of units, you pay 5%. So think HMOs possibly. And then if you buy a residential property which has been empty for 2 years or longer, you pay 5% VAT on the refurb work if that needs any work doing to it. So just bear that in mind, and if a builder wants to charge you 20%, make sure you tell them it's 5%, and if you write to your local authority or the council, they can confirm. They have an empty homes officer. You write to them, they'll confirm to you how long a property's been empty. Yeah, that gets you around having the evidence. Oliver?
Is that on the refurb and on additional development like your bungalow or not?
You can do the whole thing, yeah.
Right.
So that here gives us extra cash flow of £112,000, which most people might pick up one or two of those things, but not every single item because people aren't aware. So I just wanted to kind of show you a real life case study, one that I've actually done to show you the savings. But it gets better. So that's a 37% uplift on the profit. Now initially we bought the property as a partnership, and then like I said to you, we incorporated later on and had that saving of 19% on the 150 grand. So if you kept the property in our personal names and wanted to sell all the units, after paying 40% tax, or some of us are additional rate taxpayers, so we pay 45% tax, but let's just keep it at 40%. We'd on the 302 grand we pay 40%, we're left with £181,000. If we incorporate and move it into a limited company, we'd only pay 57,000 tax as a limited company. So you can see this, the saving there between the 245 and the 181 is 63 grand. So the £63,000 plus the 112 grand from the previous slide gives us an extra £175,000 cash flow over a number of years. Yeah. Can you see how significant that is? So 302 grand kind of becomes best part of 480 grand just by doing things in a slightly different way. And with most property projects, you'll find one or two things you can do which can save you a whole chunk of change, especially with commercial property and capital allowances, or when you're doing commercial conversions with VAT. So that's just something for you to bear in mind. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.